Good morning, good afternoon, or good evening, and welcome to the TGI. Thank God it's Friday, the 26th of April, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. Welcome. And we're going to run through our usual look at today. Look at earnings, look at the earnings calendar, what we've had on that front, what we've got on the macro side, what we've had, what we've got coming up. Take a look at some articles from the major news wires covering the major macro fundamental, earnings, central bank, geopolitical factors that are influencing the major financial markets right here, right now. And then also take a look at the markets that you guys are focusing on, primarily the S&P 500 and the Nasdaq futures. So let's have our run through then. So let's step back before we get into today. So Microsoft and Google both beating in here. Not massive beats, but decent beats in the numbers in here, but also good guidance in here. And stocks are higher in here after the bell yesterday and again in here this morning. So we've now had 4 of those Magnificent 7 post. 3 now positive. Obviously, Meta was, even though the numbers are okay for Meta, we saw the markets down with Meta yesterday. Tesla, prior to that, the numbers were worse than expected, but the forward guidance positive with potentially cheaper EVs in the pipeline, and the Microsoft and Google / Alphabet data that we've had from last night certainly lifting markets today. So 4 of the 7 out, another 2 next week, Amazon and Apple next week, and then we need to fast forward through to it's not till the end of May. It's basically another month away, about 4 weeks away. We get the Nvidia numbers, the last of those Magnificent 7. So next week's focusing on Apple and Amazon, but things are looking decent in here. So looking for further upside on the broader markets as well as those Magnificent 7 are performing. If we go into today, we've got ExxonMobil and Chevron both already posted in here today. So we've already had them beats here, significant beats, particularly for ExxonMobil on the revenue side. Slight misses, only very slight misses though, on the EPS, earnings per share. So the major stuff for today out the way on that front. If we go to the macro calendar, yesterday was fairly quiet. All eyes were really, we did have the GDP number, as we said, though, it's kind of backward looking in here, the GDP data. We did have a significant miss on that. Didn't really significantly impact into financial markets. But today, more important, PCE data, the month-on-month and year-on-year data. Remember, this is the Fed's preferred measure of inflation. So certainly we're going to keep an eye on that. We have that coming up in just under 1 hour. So that's going to be important. If we get a hotter number in here, we could see stocks giving up the gains we've had on the overnights because obviously inflationary pressures mean potentially less dovish, de facto more hawkish Fed, and that's negative for stocks. So we're looking for this inflation numbers to at least come in line with expectations. If you're a bull, to extend the rally. If you're a bear, you're looking for these to come in hotter than expectations. So the core PCE month-on-month and year-on-year are the key numbers in there, plus the headline numbers in here, the price index in here. But really the core PCE is the one we're going to mostly focus on. So certainly keeping an eye on that as we go into today. 5 things to start your day. So let's skip to the AI boom in here. So this is all talking about Google and Alphabet / Google and Microsoft in here, beating Wall Street estimates in here, and positive sentiment from cloud computing revenue boosted by the use of AI services. That's followed through into European trading into today. Another thing to note, though, that markets are watching potential intervention from the Bank of Japan on the currency side after the yen slid to a 34-year low. After the central bank kept rates on hold in here at the Bank of Japan meeting. So, definitely all eyes on that going into today as well. Copper prices going higher, 2-year highs. Anglo American have rejected a takeover bid from BHP, but all of this obviously continues to highlight, what is the healthy market, right? You've got M&A activity, takeover activity going on. Blinken, US Secretary of State Blinken has met Xi Jinping in Beijing. So even though they're trying to get trade back on track, The fact, and there's obviously lots of hurdles in the way, Taiwan, etc., and China's continued support for Russia. The fact that they're talking can only be seen as a positive, but not unlikely to impact what we're doing today. And they're highlighting here those personal income numbers, the PCE numbers in here. Oh, we also get University of Michigan consumer sentiment. I missed that. That's a little bit later in the day. That sometimes moves markets, so don't forget that. We get that at 10 o'clock Eastern today. So don't forget 10 o'clock Eastern, University of Michigan consumer sentiment. So just some headlines from the major news wires, kind of just echoing everything I've said there. Microsoft, Google gain after AI fuels cloud computing demand in here. As I say, they'll spend more on artificial intelligence, greater corporate interest in AI tools. US futures gain powered by Alphabet, Microsoft. Again, same thing there. And Bank of America, Michael Hartnett, ex-colleague of mine, at Bank of America, when I was back at Merrill Lynch, in my Merrill Lynch days, great guy, Michael. He's basically pointing to the fact that the mega caps, those magnificent seven, could continue to rise until rates bite. Okay, so saying that we could see higher prices in here, and though that rising bond yields and credit spreads could threaten a recession. So, but in the near term, looking for higher stock prices, but with a word of caution from Michael. What else do I have in here for you? Z warns blinking against vicious competition between US and China. Yeah, so it's kind of echoing what we've already mentioned there. Same sort of stuff from Reuters. Big tech saw flips positive. So obviously we were down Wednesday because of Meta, back up again on the overnights go. Sorry, down Wednesday night into Thursday. Excuse me. Wednesday night Meta into Thursday, sold off Thursday, Friday, rebound, Thursday night, now going into Friday, looking for the rebound, but all eyes on that PCE data. On the overnights in here, Hang Seng got a good boost from that rally in here, 2% up, Nikkei 0.8 higher. Probably helped by a weaker yen. Across the board in here, European exchanges, not hugely higher, but higher across the board, between 0.3 and 0.8%, pretty much in here across the UK FTSE, German DAX, and French CAC. So Europe following through higher, and having had notable losses between, well, the Dow got significantly hit 1% down in here. NASDAQ was 2/3, and the S&P 0.5%. Solid rebounds in here, erasing those gains back up to recent rebound highs in here, with the Nasdaq already up 1% in here this morning, S&P 0.8, and the Dow though lagging behind, only not even 0.2 higher in here. Obviously less tech in the Dow. And note on bond yields as well. So bond yields are continuing to go higher. Okay, higher bond yields, lower prices. So we go and look at the price charts in here. We're staying bearish. I was talking about these potential base patterns building in here, but the markets have extended lower below the recent low. So the 30-year lower, the 10-year to new low prices, 5-year just nudging, and the 2-year just nudging. So we've gone to lower prices, which equals higher yields, and you see that the 10-year here yield going to new higher yields yesterday. So stocks in here now going into the day managing to rebound even with yields going higher. If I'm still watching this, I think we really need to watch this. If this turns around at some point, if this turns around and bonds start going lower in yield, higher in prices, then that could really see a significant boost on the stock indices. And the stock indices remain positive in here. We did get that dip back lower yesterday, but obviously we're already rebounding in here today and back up. So these are a little bit redundant now because we're significantly back up in here on both the S&P and NASDAQ. And we go and see here, we're right the way back. So we're having had the sell-off yesterday. We reversed all of that sell-off. A really strong candlestick in here from yesterday's price action, taking in after the close, the strong rally, and post those numbers from Alphabet / Google and Microsoft, taking us up above the recent highs that were posted earlier this week. And even though we had a little kind of setback going into this morning, I'm still pointing higher in here. So for me, this is like a strong recovery and basing pattern in here. This will load eventually. Oh, it's down here, that's why. So you can see that surging push higher in here after the bell in here. And this looks like a strong basing pattern now that we've had formed. So we just about made new highs above these peaks in here, and now we're back up to those highs. So back up through the overnight high, 51.35 will be a real positive in here, and looking for extensions there. And it's the same story on the NASDAQ. So an even stronger story, a bullish engulfing pattern in yesterday. Bullish outside, bullish engulfing pattern, really strong impulsive rally after the bell, and we'll see that here on the 30-minute chart. So there you go, that impulsive rally after the bell, taking out that peak. And look, this peak here, we only just nudged above that. Now we're back above that. So back up above, 17,825 in here today would be positive, and then minimum target in here up here towards 17,990, and then potentially even squeezing up through there. So I know we're already up 1% already in here on the open on the bell. When the bell comes in a couple of hours time, just under 2 hours time, but this does look really positive in here. Obviously, we have to cage that with the fact and remind ourselves that in now 50 minutes, for 49 minutes actually, we get the PCE data, and that could see this strong rally that we've had on the overnights wobble. But if you only wobble back down, if we just dip like I don't know, 0.3 on the Nasdaq, maybe 0.25% on the S&P. So if we dip back down towards 17,600 where we came from yesterday on the Nasdaq, and if we dip back down towards like 50, 90, 50, 80, I would look for buying support to come in down there, and then look for potentially a buy opportunity there, even if the PCE data comes in negative. So that's some lines in the sand for you. I do think we stay bullish going into today. I think the market's turned. I think this correction that we're seeing in April is done with. I pretty much said as much. We'll post out on social media, try and get it into Discord as well. The interview I think it's been released, and I did on Bloomberg yesterday. I managed to stumble over, couldn't remember that Microsoft reporting last night. But take a look at that interview. We'll try and get that out to you guys on social media and on the Discord group. But we pretty much in there, I'm kind of sort of saying this kind of, obviously that's a lot bigger picture view that I give them. It may be no good for you day traders, but then certainly I think the tone is very bullish, and I think we could easily see markets into May back up to the old highs that we posted earlier in April. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. Have a great weekend too. Try and relax, take your mind off the markets, relax and be recharged, ready for next week when we get the Fed. Bye.